What is our central bank's game plan in the globally chaotic situation? Is the repo rate cut season finally over? And what does it mean for you and the economy? Inflation is at 77-month low. US is threatening India with more and more tariffs, and our central bank RBI, it is standing still and has pressed the pause button. Now this silence is a clear message that we are going to move ahead with caution as well as confidence. Hello everyone, welcome to Vajiram and Ravi's Flash News. My name is Shubhangi Singh, and this time in the MPC meeting, that is Monetary Policy Committee meeting, RBI has not gone ahead with any rate cut and it has paused the rate at 5.5%. That means there has been no change and the stance has been maintained neutral. What does this mean for you as a consumer and for the economy, and why is this move very significant for us to understand? So if we talk about this particular MPC meeting that has just taken place from August 4 to August 6, 2025, here RBI has opted for a neutral stance and they have pressed pause on the 5.5% repo rate. Now, many experts as well as the market was expecting there might be a further deduction in terms of the repo rate, but this is an important stance that Reserve Bank of India has taken in this very situation where there is a lot of chaos. What lies ahead in terms of our economy is very unclear, and this is why this becomes very important for us to understand. So first, if we look at the reductions in terms of repo rate that have been done this year, we have to understand that almost the repo rate has been knocked off by 100 basis points. Now my question to you here is, what do you mean by basis point? Do you have a clear understanding what do we mean by basis point? Put it down in the comment section. So if we look at the timeline of 2025, then you will find that from almost, we are talking about 6.25%, there has been a reduction, the reduction has been from 6.5% to 5.5% in this very year, where there were announcements in Feb, there has been announcement in April and then in June. And in August policy, there was further expectation that this might go down further. That is why it matters, because we have to understand that in the duration of Feb to June of 2025, there has been already a deduction of 100 basis points that we have seen in repo rates. Now, the second thing that we need to understand in terms of the importance of this neutral stance, that this focuses on still supporting growth, which is very much needed given at this point of time when we are looking to strengthen our domestic economy. This particular repo rate is going to support growth, but at the same time, it is not going to ignite inflation. It is very important to control inflation, otherwise economy suffers heavily. So we do want that the credit at that particular repo rate should be available, the EMIs are stable, the economy looks predictable in terms of credit availability, but we do not want that availability of credit or the money supply to fuel the inflation. And furthermore, the last important point, that this particular stance also highlights the fact that RBI is looking forward to understand that what are the changes or what are the change of dynamics that we have to understand in coming times, and then accordingly the rate cuts could come in, because then only we will be knowing that what our economy actually needs. Because in backdrop of the US tariffs as well as the global uncertainties that we are part of, it becomes very difficult to come up with a predictable consequences of the policies. That is why RBI has gone ahead with a pause, but this pause does not indicate the inactivity, rather it indicates caution and understanding of the uncertainties that remain around us. Now, what does this pause mean for you as a consumer? If we talk about the economy and the consumer, the first thing we have to understand in terms of borrowers, it remains a good news because there will be relief on EMIs. What kind of relief I am talking? Because as there has been no increase in repo rate, there will be no increase in the loan rates, be it home loan rates and others. Furthermore, this also gives the consumers, the borrowers, the chance to refinance. That means the borrowers who are mostly paying more than 50 basis points over the market rates, they have the option and they have been advised so that they can switch to the repo linked loans which are available in the market. Furthermore, the floating rate loans, that means the loans you are taking, the interest you pay, it is based on the fluctuation or the changes of policy. Another provision is the fixed loan rate. So in that, at whatever time you decide this is the interest rate as per the policy I am going to pay, and it is fixed for the whole loan duration. Floating rate loans will benefit the most because as the rates have been decreasing, they have decreased almost 100 basis points and it is going to be stable for another couple of months. So for consumers, for borrowers, especially on the borrowers end, it seems to be stable and a good news. But if we talk about depositors, it is a time that they have to move in action because this gives them the last window where they will get the high fixed deposit rates. That means banks are still giving almost 7.25% more than that in terms of FD returns, and specifically more of them are for senior citizen bonus, etc. And this is the time that depositors can use it and lock in their long-term FDs, and they can use FD laddering to balance liquidity they have and the returns they want at this point of time. So in terms of consumer, be it for borrowers and depositors, borrowers are in some sort of relief, but depositors, it is time to take action so as to ensure that if any change comes in the coming policies by the MPC, you know that you have the advantage of taking action and locking in high FD rates which are still available in the market. When we look on the other end, when we are talking about the macroeconomic indicators which are basically justifying the reason that we have gone for this particular pause, the first reason remains inflation. So when we talk about inflation, as per June 2025 CPI, it was 2.1%, which is 77-month low. If we look at FY 2026 forecast cut, from 3.7%, it is coming down to 3.1%, and RBI is expecting there will be rise to almost 4% in terms of inflation by the end of this financial year because the base effects will start kicking in. This is to be understood coupled with growth as well as market signals. When we are talking about GDP growth for financial year 2026, it is still retained at 6.5% by RBI, and with that 10-year bond yields will be stable at 6.3%. That clearly suggests that the market is expecting no further cuts anytime soon. And the time that will be required for transmission, that means RBI wants that whatever rate cuts it has given in the previous policies in the year of 2025, that should get time to be transmitted to banks and to the consumer. If RBI comes with changes so regularly, then the time for transmission will not be available. So these are the indicators which have been the reason behind the pause that has been pressed by RBI. Now when we look into other scenarios such as the global concerns, when we are talking about the indicators beyond our domestic factors, we have to understand the first factor remains the US tariffs. We have already been imposed by 25% tariffs. Another penalty has been mentioned which has not been disclosed what is the percentage there. And furthermore, India is being continuously threatened in terms of its purchase of Russian oil that it continues to do so. So we can expect that there might be more tariffs. Furthermore, RBI is taking a cautious stance, especially in the geopolitical scenario, because it is involved with global economic fragility as well. So if this actually worsens, then RBI would have to look into the economic fragility and take decisions accordingly. So another reason that is external, that is coming from the threat of US tariffs, that we want to be cautious, we want to understand the situation at our hand, and then RBI will come up with the changes it look forward. Now let us talk about the significance that this pause hold, that what is the significance that there has been no rate cut. First significance is the fact that this is a simple policy strategy. It is a dovish pause. When we talk about dovish, we have to understand the word is coming from the bird dove, which is a symbol of peace, and here RBI is not hiking. That means it is leaving room, it is leaving space that it can further cut repo rate if the inflation stays low. That means the rate of increase in prices is not moving at all, and it is further a balancing act. That means we have to focus on price stability as well as growth support. That has given direct signals not to just borrowers, not to just depositors, but to the market as well, that RBI is in a watch mode as of now. It is monitoring inflation, it is monitoring rate transmission which is going ahead to banks and consumers, as well as global development. So this particular policy move cannot be seen as a pause, rather it is a strategy which is being practiced to understand the scenario, and RBI, as in the role of central bank, will decide its policy accordingly. Now that was all from my side. Thank you so much.